And it's time to take a look here at your weekly commodity market roundup on the Rural Radio Network. I'm Clay Patton. Of course, we talk with Darrell Holaday, Country Futures, Frankfort, Kansas, at the end of every trading week to kind of get a feel for what happened in the week as well as what to expect in the week ahead. But Darrell, we get out a lot of USDA data. We have a lot of strong demand returning. Grains and livestock are in the red, though, for a Friday, and it seems like this broader market trading more than anything, possible war in the Middle East, definitely has this market on edge. What do you make of the week's trade?
Well, that's right. We left the week was about as nervous as you could be. You know, you look back a week ago, we woke up Saturday morning or early Saturday morning, you were following online, you found that, that we saw the attack of Hamas on southern Israel and how all the developments there. I'm not going to rehash all of that. As we went through the week, I guess there was kind of this hope that, well, it's horrible, and we got all, it's people positioning, and it's a lot of political response. Of course, Israel immediately retaliated, but when we shut down on Friday, or as we came to the close on Friday, we had Israel poised to enter Gaza, and the market was very nervous all week, but I would say if you measured in terms of degree of nervousness, it would be at its highest level for the week, right as we came to close on Friday, because we just have that uncertainty of what in the world's going to be, what are we going to look like come Sunday night. And that's why you saw the energy market make a big rally late on Friday. It really kind of was back and forth during the week, and then just a lot of strength and a lot of concerns in the equity markets, and you could feel it in all the ag markets also. Now, the corn market or the grain markets really didn't follow that energy market higher, because that some type of situation like that would not be a type of war. We don't really know how that would play out. We don't know who's going to be where, what sides are where's China fall on this, with Iran. It would be a very very difficult situation market-wise, and not to mention the loss of life that could occur. So that's why what I mean when I say a nervous market. We went into we were under pressure most of the week in corn and beans until we got to Thursday. We got the crop report, and USDA or NASS put the soybean yield at 49.6, so that dropped a half a bushel. The corn at 173, that was down 0.8 from last month. So both those numbers were below expectations, and the soybeans had been under a lot of pressure going into the report, so they had a nice little short covering rally, pushed that November bean market back up near $13, but we gave up a lot of ground on Friday after that from those highs, and even corn gave up some ground from the high of near $5 back down to $4.93. I think you can talk about a lot of things that were in the report, but I think when you stand back and after the report, you look at the thing, kind of the 5-mile flyover after the data is out and after you see how the market responds. There's two takeaways that I have off this report. Number one, and we've talked about this before, the South American influence on the soybean and corn market, especially the soybean market, is really becoming more and more a factor every year. And as our focus, as you're going to see, this market immediately turns its focus to South American weather. And for example, let's use soybeans. What I want to point out here is on June 30th, after the acreage report, where we already knew how low the soybean acres were in the United States, that we'd seen that drop. If I'd have told you the soybean yield in the United States was not going to be any better than 49.6, you'd have suggested that surely soybeans would be $14 or higher. But here we are struggling to get back to $13 with that number in front of us in the October report. Why is that? It's because the market is looking forward to a South American crop that if you use USDA projections and throw in Uruguay and Paraguay, you're talking about a 227 million ton crop that they're projecting versus this year's U.S. crop is 111 million tons. So it's more than double the U.S. crop this year. Which ones? So they're representing 2/3 of the production in the world in the 23-24 crop year, theoretically. Now you say, well, yeah, but there's a long way. Argentina's been dry. Brazil's northeast area's been dry. And there's a lot of things that go wrong. They haven't even really planted that crop. That is correct. That's absolutely correct, but the potential is so much bigger than the U.S. crop anymore that's becoming the focus of the marketplace and why we're not setting at $14. You have a problem down there in South America that's serious. In other words, a crop that as a total might drop back down to 180 or 190. You will be talking about market will certainly respond. The second takeaway is the market on the corn side does not give a darn what the yield is, cares about what the total production is. It doesn't matter how you got there, but you got the corn crop above 15 billion bushels, and that's very close to a record crop that we've had two other crops that were above 15. It doesn't, like you said, the yield dropped to 173, but you planted 7 million more acres, and the crop, there's a lot. You got 15 billion bushels, and the projected ending stocks are 2.1 billion bushels, and we had a hard time holding things together this year. We fell well below. We fell to the 450 to 460 area late in the crop year with a 1.35 carryout. What are we going to do with 2.11 carryout? That's the takeaway. You could tell how the market's on. Didn't mean we didn't rally, but it's why we didn't go a lot further, and that's why the upside's limited until you see some export business that's serious. And that's why the nervousness is more important because of the fact that we talked about, because it would certainly restrict grain trade. It might get into the whole China-U.S. relationship could be at jeopardy. There are just a lot of issues that could occur depending on how that develops. And so that's why the market fell off the highs after the report on Friday. So in the end, we were just slightly higher in the corn and beans, slightly lower in the wheat. December corn up a penny on the week at 493. March corn 508 up 1. November beans 14 higher at 1280. March beans 13.13 up 14 also. December Kansas City wheat down 5 at 669. New crop July Kansas City down 4 at 688. Crude oil 85.69 up 490 on the week, but all that net gain was on Friday. When we went into the market open on Friday, Thursday night Friday, we were basically unchanged on the week. Got all that strength coming on this nervousness developed on Friday. On the cattle side and the livestock side, much stronger cash cattle kind of rescued the cattle futures. They were under pressure early in the week. Once again, the nervousness in the market that never felt real good about the situation on the future side. But boy, packers needed cattle as we got into late Wednesday and Thursday, and they pushed bids to 183, 184, 186 in western Nebraska, 187 in Iowa. And that rallied the futures to higher levels on the week, but we came well off those highs in those deferred contracts December on out from Friday, because once again the nervousness of the market that we've already talked about certainly not supportive. And then of course raising energy prices back up on Friday, seeing that move up after we've seen some pressure over the last 3 or 4 weeks, is certainly not good. As those economic numbers, there's also some consumer data that was out on Friday certainly indicated that consumers are losing their savings, they might be losing some buying power. We certainly know they've lost it in terms of inflation, but they might be losing it in terms of just total raw dollars as we continue to move forward. October cattle on the week, or I should say, also mentioned seasonal weakness continues on the hogs. We also think we might see the seasonal buy low kind of in that wholesale beef. Once again, the outside factors may have a lot to do with that. October cattle up 205, 185.12. December cattle 186.75, up 8 cents on the week. October feeders up $1.50 at 249.87. November up 70 at 251.57. October hogs went off the board 81.92, down 20 on the week, and the December hog contract down 407 at 69.50, testing that seasonal low.
And that again is Darrell Holaday, Country Futures, Frankfort, Kansas. Always catch them at 1-800-292-4038. Do remember, trading futures and options involve risk of loss, may not be suitable for all investors. Do consider these risks before investing.